Let's get right to our floor show. Joining me now is U.S. Global Investor CEO and CIO Frank Holmes, Laffer Tengler Investment CEO and CIO Nancy Tengler. And Nancy, I'm going to start with you. Are you worried about these big winners and these high valuations?
I'm not,
No.
Cheryl. I think every summer we do get a transition out of the tech names. It's usually when all the hedgies are in the Hamptons, and we see this movement to more defensive names. But if you look at earnings growth, it's going to continue to come from technology. The One Big Beautiful Bill Act, all of the three major items in expensing of R&D, 100% expensing or bonus depreciation, 100%, and then the deductibility of interest expense is going to drive $50 billion in cash savings to the four major hyperscalers and $158 billion to the top 400 names in the S&P 500. So I think there are a lot of levers that are going to offset, drive earnings growth, margins higher, and valuations will look kind of reasonable. I don't think we're that out of line. I mean, and you know my analogy to the 90s. We are in a period that is analogous to that. I've been talking about it for 4 years. Productivity is going to save the day, and we're going to get that from AI and other technologies.
And Frank, I heard you agree with that question and Nancy's answer, but you're also focused on the politics of the day because you're looking at defense companies. I mean, with all this extra military spending, the fact the Europeans are going to be upping to 5% of GDP, they're spending with the Ukraine deal and those security guarantees, even though those talks are, still underway and war is still upon us. Frank, this is something where you see opportunity.
I see we're in a super cycle, and definitely energy, data centers, and all the components that go into the hyperscalers because of this significant boom in AI and the productivity gains we're going to get. But there's this bearish sentiment. We see it on the airlines. Last year, there wasn't one analyst that thought United would go up 30%, so it only went up 130%. And we still get these negative narratives on the airlines, but JFK, I think they're passengers are up 15%. So there is a global economy that's growing and going, and we see that definitely in the airlines industry as a global growth. And we then turn around and take a look at domestically the big spend on data centers. I believe it's going to continue to grow, and military needs those data centers just like Apple phones, and everyone needs these data centers, and the big spend will continue.
Yeah, and you mentioned the war ETF in your analysis. Nancy, let's talk about the Fed. We've got Jerome Powell, 10 a.m. Eastern time tomorrow from Jackson Hole. This is going to be his final speech. And the risk to the market seems to be, in the chatter, is that he could come out and actually, react to that PPI number that we got last week and really get a little more dovish. I mean, you've got, more than an 80% chance of a quarter-point cut. That's the bet. He could throw cold water on that tomorrow, Nancy.
Yeah. No, I think you're right, Cheryl. I think that is what we'll get. We've had a Fed chairman, I started writing about it in 2021, that has been 100% wrong at every turning point, showing no humility and no ability to learn from his past mistakes. And so if you look at, 25 basis points not going to change the world, but there is a notion that the labor market is starting to soften some, that we're not seeing robust economic growth. If you average first quarter, second quarter, it's so we want to see an environment that is also not punishing the low end consumer, and that's what we're getting. I think Kevin Warsh said it the best, which was there's one problem with data dependence, or there's a problem with data dependence, and that is the data and the dependence. So when you're looking backwards and driving through a rearview mirror, that is not how the Fed has operated during my 40-plus year career. They have forecasted, looked forward, and made decisions in anticipation. And Greenspan was quite good at that during the 90s because he understood productivity. So this myopic focus on tariffs is destructive, and I think it will be shown by history to have been a tragic mistake. And then the last thing I'll say is, with the BLS numbers getting, revised so significantly, you could make the argument that the Fed should have already begun cutting.
Interesting. Well, and you're right. The employment situation has been the other factor in all of this. Well, we'll see what he says. And if he upsets the markets or rewards them, we shall see. Frank, final word to you. Jerome Powell tomorrow, 10 a.m. Eastern time.
Well, I think it just he's on his way out, and I think one of the big investments this year, and the theme has been gold and gold stocks. If you're worried about $37 trillion deficit, if you're worried that we now the second biggest line item is $1 trillion of interest payments, then gold is definitely shining. And it's also something to deal with China fighting the de-dollarization and fighting against us in many sort of discrete ways, and central banks around the world buying more gold. I think that gold having a 10 to 15% weighting in a portfolio is just wise. And that's why I love the gold royalty companies like Franco-Nevada. It does 30 million in revenue per employee. It's the highest in the New York Stock Exchange.
No, gold is. I still have to look twice when I see where gold is sitting at right now. It's over 3,300. 3,300. Frank Holmes, Nancy Tengler, it's great to have you both here. Thanks for joining me.